Last week, I think it was probably you, Rick, or someone else. I don't remember exactly if it was John or someone who asked about if we could, talk a little bit about negotiations. And I did, sign up myself because I do have some experience in as part of my, corporate background. I worked a few years in global sourcing. Um, so I do have some experience in negotiation and wanted to share, with you a few ideas. But more than me sharing, I wanted to also have kind of a conversation and have contributions and comments from everyone. So I would like to first start by asking if someone else has experience with negotiations.
So I actually sell SaaS software for a living, and I've been doing so for 5 years. So it's a big part of what I do.
You sell SaaS?
I do, yes.
Okay. And how does negotiation come in place?
It's interesting. I did services in SaaS now. So sometimes you work with procurement and, there's a number of different stakeholders that you typically engage and, they kind of play off each other a bit. Sometimes, you're negotiating directly with the IT organization who then works with procurement, but it's a variety of different stakeholders. Sometimes it's technical side, sometimes it's the business, and sometimes it's just directly with procurement.
Yeah, and you definitely always want to know or map who are the decision makers and what kind of topics you discuss with one and what others you discuss with the other, and keep everyone in the loop and all of that, right?
Yep, absolutely.
I understand. I've been kind of in the other side of the table. So, do you feel, for example, by doing this, kind of experienced or qualified if you were to purchase something? You think that selling and being on the other side of the table, even though you're not selling a business, will give you some edge?
Absolutely. I think it definitely adds value, especially the entire search process, and then ultimately buying is very similar to the actual selling process. So they're kind of the same fundamentals. So I think there's definitely correlation.
Yeah, I have also taken sales courses, and some of the things they tell you is to talk about the needs of the purchasing party, right? What they're trying to achieve? Do they have any pains, or uh, in order for you not to give information they don't need, or for them to feel that you're trying to pushing them something, right? It's about understanding what are the needs of the buyer, right?
Absolutely. Yeah. And not just the needs, but kind of a hierarchy of those needs. And, spend your time beforehand figuring out exactly what you're willing to give up, where you're willing to go, what's most important to you, and then trying to predict the same on the other end. And
That, yes, that's in preparation for the negotiation. So absolutely, you need to have very clearly, outlined all of those points that are non-negotiable for you and could be potential deal breakers. And you also want to have it in certain order. Um, and uh, and also you have to understand which points are less important for you, where you could negotiate. And there are some specific strategies, to tackle certain, some of those in certain order. And perhaps, for example, good advice: if you are going to discuss price, do it at the end, because if you do it at the beginning and then some other, points, come up in a discussion, then they're going to say, uh, no, they're not going to move because they have already negotiated price, or they want to reopen, the negotiation of price. So leave, I guess, the most important for the end and start with the less important, where you can be more flexible. That's what has worked for me. But what about you? You think the order is important? What would you do?
I mean, yes, so the order is definitely important, and figuring out, ultimately how you can, kind of grow the pie between the two of you. I think one of the one of the hardest things and one of the biggest mistakes is just patience and not negotiating with yourself after you've established that criteria. When you may end up waiting a week to hear back after a proposal or after, countering something, and you just really have to, have patience and stick to, your guns about exactly what you've laid out to make sure, you're not talking yourself down unnecessarily.
Mm-hmm. Mm-hmm. Also, a lot of negotiation has to do with perception. So there is some, I guess, theory that talks about perceived value, and they show a diagram with hands like these, okay? Which means in order for some point, to be mutually agreed, if the value of that point is 100, you have to perceive that you are giving away 95 and receiving 105. Okay, and the other party has to be, thinking exactly the same. They are giving away less than what it's worth. If they think that it is worth 100 and they're giving away 105, it's not going to happen, because then you're going to be like this. There's going to be always, okay? So how is that established? Is difficult, because not always is kind of a quantitative approach. Sometimes it's qualitative approach. Okay, but you have to understand that for some points there's going to be some threshold, and some point where they're going to say definitely yes, some point where they're going to say maybe yes, maybe not, some point where they're going to say most likely not. And what are going to be deal breakers for them? Okay. What else is also important? Sometimes when you are conducting a negotiation and you don't agree on a point, or they let's say get all over the place, you can always call that point to be taken later. You don't have to insist or create a negative environment, a confrontation environment. You can say, okay, seems to be that we still have our positions kind of far apart, and but I think there are other points we could talk about, right? And leave these one on the side, park it. It's also a good strategy. For example, if you're negotiating and you have, let's say, you have a team or one more person on your side, and then there's other people on the other side, you can always ask for some break or adjourn. And it's perfectly okay if you have kind of let's say this is done over a conference, a chat on the side where you and this other person can be talking and making comments about what they're talking about, whether it's acceptable or not, or whether you agree or disagree, or what would be the response or the strategy, or who does what. You also have to agree with this person or persons as part of your team, who is going to have the lead and who is going to be the head negotiator. Okay, because it's not like everyone on your team can be making agreements to what others say. They can make comments, they can make enhancements. So sometimes, for example, I like to have someone who's an expert. Let's say in this case of a business, this expert could be legal counsel. So he doesn't have to negotiate, but he can always, tell you whether a potential liability or something could be there. And that's important. So it doesn't have to tell the other party, hey, that's not acceptable, because you're the head negotiator, and you can say it is acceptable. You just have to receive the advice from your counsel. So all of these roles, you want them to be pre-established in your team, right? If it's face-to-face and you cannot be making comments on the side, simple sign or something, or a certain type of question that you have pre-agreed triggers that idea that, hey, do not yet agree to these, let's have a talk. Okay, so all of these are not tricks or it's like unethical. It's completely legal and ethical. It's just ways for communicating, right, during the time you're doing these negotiations. Also, keeping records of what is said and what's agreed, it's important, because even though it may not be right away formalized, at least it's written down. So the other party, so after the meeting, you can always share, those ideas that were discussed. Because if there's something missing or not clear, it can be clarified before it, any agreements or anything in writing that is going to be formalized is reformulated, if that is the case. Okay. So, because sometimes I may have understood something and you meant to say something different, right? But if not contested, well, then it goes then added to the agreement, or further clarified in the agreement. Okay, so keeping record of these points is important. Minutes of meeting, all of that. Another very good strategy when you're negotiating is to say, if you would agree to this, I would agree to that. So you're not giving anything for free. You are just, wanting to ask if you, right?
Can I ask a quick question, Daniel?
Yeah, absolutely.
So I think one of the issues that I have, I'm kind of a little stuck in terms of how to move forward with this. I'm talking to a company. It's kind of like the first company that I'm speaking to. And, it's very early days. They basically put a price on biz buy sell of what they're looking for. That price to me is actually very, very high. Okay. And I don't believe that they've got a lot of interest in their business, mostly probably because the price is high. Also, it's a little bit of a, not a business that biz buy sell do a lot of trading on. So that could also be a reason why. So the point is, I think I'm in there with a shot because they're asking very high price. I'm obviously not going to pay that price, but I want to bring them down and not make them feel like I'm giving them a lowball offer. I really want to say, I'm giving you this offer because of these factors. These are the factors that I have, and I tried to get out of the broker, like, what is important to you guys? How did you come up with that evaluation? And I do feel like there's some places where I can say, okay, let me bring the price down, but they, like, some of the owners actually want to stay on in like a role that basically earns commission, so it wouldn't be like a salaried role. So I can kind of offer them that and say, oh yeah, it'd be great for you to stay on, you can earn commission. That's kind of like a negotiating point. But other than that, other than having my reasoning, not really knowing what their reasoning is for the price, and having a little bit to offer them to bring the price down, I'm just not sure how to go about bringing that down and saying, we need to get sort of more reasonable about the price here, without making them feel, especially as I'm going through a broker, and the broker is just going to pass it on to the owners and be like, oh, well, he gave you this offer and it's way. Yeah.
I'm going to cut in here and hopefully add a little bit of value to the dance that you're in right now.
Mm-hmm.
I've been a commercial real estate investment broker for years, which is mechanically very similar to these business brokers. So I think what you need to do is just engage this broker as tell them that you need some hand-holding. You don't want to offend anybody. Usually I'll say, especially if I'm going to lowball somebody, I'll have a conversation with the broker first. I'll say, listen, this is a conversation between you and I. This is not to pass. This is not an LOI.
Mm-hmm.
I don't want this to look bad on me or to look bad on you either if we're going to offend anybody, but I'm having a really tough time here and I need some hand-holding to get to where you guys are at. And then you just have to show him where you're at. Like, I want to show you, Mr. Broker, that I'm not here trying to throw shit against the wall and hope it sticks, trying to just carve out whatever deal I can. Like, this is my underwriting, this is my logic, or these are my comps, however, whatever your logic is, to show him that I'm really trying to put my best foot forward here. I like your business. I'm not getting there. Help me.
Yeah.
And two things are going to happen. Either he's going to help you and you are missing something, or you're going to get him on your side and he's going to realize, listen, he's got to talk his client off the ledge and get him real, or he's just wasting his time.
Yeah.
So then you're going to turn him into one of your allies and say, how can we get a deal done here that makes sense for everybody?
Yeah. Yeah, thanks for that. I think that's a really great point. And that's kind of how I'm thinking about attacking it. Like, I don't want to offend the owners that think, for whatever reason they can get that price. And I did ask the broker, try and explain to me, what your logic was. And he just basically said, oh, well, that's kind of what we sell businesses for. And it's like a 4.5 multiple. And I'm like, I don't know. That's pretty expensive.
So here's another thing that I've done in the past. Just because we're dealing with brokers that might be selling multi-million-dollar businesses, not all of them are very sophisticated themselves, right? They're salespeople. So oftentimes they don't know how to portray your logic and the reality to their seller. And who knows how sophisticated their seller is, right?
Yeah.
Oftentimes your guy could have been in a situation where he basically bought himself a business listing. He was competing with other brokers and he said, Mr. Seller, I'll get you this for your business. And he's just putting a line in the water. So if you can't convey your position to him, or you don't think he can convey reality to his seller, then put together just a nice, respectful letter to accompany your LOI that he has to present to, PDF it. So he's got to present it to the seller and say, listen, this is why I'm coming up with this value.
Yeah.
And go from there.
Yeah.
That's great.
No, absolutely. John, that's a great response. Actually, I think that being open to show your process helps a lot, because when you show the other party, what are the reasons and facts, behind your evaluation, it's harder for them to argue. So at the same time, you offer, showing your valuation, you should ask, hey, if you share your valuation, I am willing to share mine and walk you through the details. So if I am wrong, or if I am, omitting or overlooking some facts or some data or some basis for my evaluation, it will be a tremendous help for me to understand that your price is more accurate. But
that's right.
But if you would show me how you arrived to that, not just tell me, oh, this is how, we sell businesses, because there's a market. And I'm sure you based your valuation on market. So if you would show me that, I think we will be making a great step forward. So try to sell them the idea that they need to open up, and you're willing to open up as well. So you're telling them, I'm not trying to take advantage of you. I'm just trying to, rather than give and take or, taking positions, is more like, let's reason together, right? Let's share the facts and information, and then it's going to be easier for both parties to get closer.
Yeah.
Have you gotten him on have you actually spoken with the seller on the phone yet?
No, I have not spoken with the seller. I've only spoken with the broker. And, basically all I said to him was, I did ask, and I said, can you give me some sort of information about how you arrived at that price? And his general response was, well, yeah, we put a 4.5 multiple on it, and that's what we tend to sell our businesses at. So I think he does seem like a reasonably well, like a reasonably good broker, like he knows what he's talking about. But he did just sort of shift off and said, 4.5 multiple. But he didn't give me any reasons why. And I think at least from the acquirer side, I have information as to why I'm not seeing a 4.5 multiple for the business.
Yes.
So you're saying he sounds like a reasonable guy. I think asking some more of the right questions of him too. Is your seller reasonable? Where's your seller's headspace at? And then I would recommend engaging that broker and getting you on the phone with the seller. Because it's a lot. Listen, there's two mindsets out there. A lot of brokers like to keep as much control of everything as they can. They think it benefits them. And a lot of brokers I think the smart brokers want to get people together on the phone or at a conference room or whatever, because rapport goes a long ways. It's a lot harder to tell somebody no when you're in person or when you're on the phone. So you end up working together, and people end up getting a lot more real with each other than they do when they're on a, typing something into a message for their broker to deliver to you when you're some faceless bozo.
Yes. Yeah, definitely. And what's the word? When you're anonymous, you could easily be more aggressive. When you're showing your face, when you're face to face, you tend to be more agreeable, more talkative.
So is that sort of common though to speak to the seller before making an offer? Or do you just generally look on the offer through the financials and all of that kind of thing?
No, definitely. The idea is that you work with your tools, right? And then you understand the business from the prospectus, right? They have shared with you, but then you go deeper, with your analysis, with your valuation, right? And if you see one of the tabs in the deal analysis calculator, it has some questions for you to get the ball rolling, the conversation with the seller. So if, let's say, this business is home services, something you want to do is gain a little bit of knowledge, at least a little bit more than the business broker, so he cannot respond or answer to your questions about how the business works and this and that. Most of the times they're not as knowledgeable. So when you expose that, then it is obvious that you want to talk to the seller, right? Some of these questions, make sure they are deep enough for you to understand. For example, hey, can you describe the lead acquisition process? The seller is not going to know that. I mean, the business broker would not know that. So that is the reason why I want to talk to the seller. Can we have a phone call? And so once you have this phone call with the seller, and you start building rapport and gaining more information about how the business operates, then you're in a better position to complete your presentation to the investment committee. We take a look at it, right, together with you. And then, we can additionally give you some advice, and you're ready to present the LOI. Okay. But don't talk about numbers or prices until, some other parts of a business are known. Because if you remember in your investment thesis calculator, you have an initial multiple, and then given some of the risk factors, you penalize or enhance that multiple, right? And do not be shy of lowballing them. Just this past week, we've been working on a deal in Florida, and the asking price was about $4 million. Okay, so pre-LOI number we threw in was below $3 million. So that's substantial. That's substantial. We cleared more than $1 million, from above 4 to below 3.
Yeah.
And they did not get offended.
Okay.
They didn't tell us, hey, go to hell. No.
Yeah. Okay, because that's what I'm afraid of. I'm like, I want to engage in this business. It does look good for me, and I think that actually the broker has kind of set the expectations on the seller, and then the seller is going to probably go, well, you're reducing it, by a million.
Yeah, but you can always ask, the business broker, hey, what is your process to engage with the seller, right? Like, do you educate your seller regarding the value of the business? Do you conduct valuations for them? And even though he may have responded already about the 4.5, the more you ask, at some point you would most likely realize that he has done some sort of valuation. Or also ask him, hey, what is your selling strategy? Is your selling strategy to collect bids by a given date and then select one? Or if I was to present one LOI to you this week, would you give me an answer in 48 hours? Which meaning, do you have established a threshold where you say below this is not acceptable, and above these, we can accept or look at an LOI and give a response? Because in the other hand, the same as he is protective of the seller and is trying to lift your expectations, you can also say, hey, my LOI, because if I present an LOI, it's not going to be open there for 3 weeks, definitely, because I may be looking at other businesses as well. So if you are thinking of me as a buyer, and I am a serious buyer, I'll be gone. So I'm not going to be waiting for you to use my offer to leverage against others, right? So all of those ideas also you want to convey during this negotiation, right?
Yeah, I think I got some really good points there. Thank you very much.
Excellent contributions, excellent comments, and also very, very good. Thank you,
hey, Rick,
John.
Moving forward, I know lots of other people here for you to bounce things off of, but moving forward, if you want to reach out to me, I'm happy to have side conversations with you about this too. And you know what? I think there's a small element of this, you just getting to the bottom of this and asking the right questions. And then it might be just so you can get this off your plate one way or the other. If he's not real, he's not real, and it's time for you to move on.
Yeah, exactly. That's where I feel I am, because I'm like, there's no ways I'm going to pay their asking. I know that maybe they're a little bit flexible. I'm not sure that they're flexible to where I'm going to offer, but and I'm going to offer lower than what I'm actually prepared to pay, and give them opportunity to work me up. But and that's
and like Daniel said, you have nothing to lose by shaking a tree with a low ball offer. What are they going to do? Say no?
Yeah, nothing to lose. Absolutely nothing to lose.
Yeah,
actually, you gain in your experience, regardless of the response. Let's assume it is no. Even from the response, you learn on how they respond, if they're kind or not, or they get pissed or whatever, right? Even from that, you learn. Excellent. Thank you for offering that. I did the same for a guy. Some of you may remember, maybe not. Acquire a business. It's a engineering services firm, and they do project management and some work. Okay, and during one of these conversations, we talked about receivables, and even though receivables are most of the times taken by the seller, my comments were very I guess well received by the audience, and then told me, hey, Daniel, exactly the same as offering. Hey, can we have, and actually we did have a conversation. I was not working for Acquira. I was an entrepreneur as I am today, but as you, not in this other side of the table with Acquira. And I did volunteer to help Roberto, and I participated in 1 or 2 calls, with this with the sellers, and then gave Roberto some good recommendations. And then he was very happy with the questions, I came up with during this conversation. And actually later on, he offered me, some compensation for my time. I appreciated that. But it was kind of short. It was not something important or relevant. But actually, the interest of Acquira on me working and helping other acquisition entrepreneurs and using half of my time, of course, now in a paid mode, came from there. And that's the idea of the community. And so, guys, be always open to offer advice and support to others, because that's a sign that you're also open to receive, right?
Hey, Daniel.
Thank you very much.
So,
mm-hmm.
This is Vipin. So just to provide a perspective from my side, as I'm doing business brokerage as well as looking for a business for myself.
Yes.
I think there is nothing like a lowball offer. Different business brokers have different standards and thresholds. So if you're comfortable in making your offer and you have a strong valuation model behind it, the broker in fact might appreciate that you did your analysis as compared to someone else who might just throw a lowball number and not provide any backup. So there's nothing wrong with providing an estimate of how you got the value, and if you have a model, sharing it with the broker. Maybe they'll learn something out of it. Not everyone has the same level of education and qualifications, and it's a learning process for everyone.
Yeah, I agree. Thanks. And and I think one thing I'm grateful for from Acquira is having a process to start with. So I have a process to sort of say, like, I've never valued a business before, but here's the process. And that's where I can come up with my process. And at least it's something I can go to the broker with and say, this is the process I used. I took it from, people that know and have experience. And I think at least open up the conversation that way, rather than them just shutting me down and going, no, you're not doing it right. I kind of have that backup a little bit.
Yeah, there's one book that I really like that I haven't had a chance to read completely, but I have had some discussions, is that Never Split the Difference, written by Chris Voss. It has some really good points on how to make your offers. He talks about building a rapport with the other party, and he's done negotiations with FBI for several years, and now he runs a company which essentially trains people on negotiating. So it's a great book. Even just reading a summary online will give you a lot of good ideas.
Never Split the Difference.
By Chris Voss.
Okay. Yeah, I have it here.
I'll check it out.
It's a very good book.
Let me put it in the chat. Good. Yeah, and definitely having the the context and the education and everything we're learning gives us more confidence to present our points and our reasons why we think this number is reasonable, or why that statement we stand behind it.
Yeah,
very good.
Totally
very good.
Thank you, everybody. I really appreciate all the input. That's really helpful.
I'm going to tell you a little story. A business broker recommended me some people who were trying to start a similar effort as Acquira, private equity. And I did talk to them a couple of times, and they invited me for lunch. They're here in Houston. But when I did research a little bit more on them, they had criminal records. So I did, call back, the business broker, and I told her, what happened, and also to make her aware that she wouldn't want her name, or her reputation, built around these guys. I'm not saying that what they were doing today was criminal. Maybe it was legal. I just wouldn't feel comfortable associating myself to people with such a record. And obviously I made sure of the names and exactly, the convictions, and read a little bit. I probably spent a full hour on that. She was so grateful that she helped me tremendously, with the deal. It's not that she gave me information about the seller or the deal that she shouldn't, but she facilitated a lot of things for me. So things happen sometimes, and take advantage of that, help others and they'll help you. That was one case. The other case, I did talk to business broker about my valuation, and I told him, hey, because in this case, the sim he was presenting had details on the valuation, and I found inconsistencies. So I called him for a meeting. We went to Starbucks because he was here in Houston, and I told him, hey, these references of the multiples, I mean, look at the numbers. They do not match. Not even the ratio between this number and that number. Where do you get this information from? And he was like, so I caught him. And then, so he had 3 references, and only one that was consistent with mine was good with my reference for the multiple. Then he also had other, similar to our investment thesis, other factors where he was scoring the business. And when he was scoring the business, between 1 and 4. So at the end, he averaged all those, and then he came up with a 3.5 average, taking that as a multiple. And I said, no, you could be scoring all of these factors between 1 and 10.
10, yeah.
I said, this has nothing to do with the multiple. So I do disagree with 2 or 3 of your evaluations because of these. But even if I would agree, I would not agree to using the average as a basis for the multiple. There's no relationship, right, between one and the other. And then I show him, my investment thesis, and I said, look, the 1, 2, 3s, and 4s could be used to enhance or penalize the original multiple. Yes, that's different. So then he was pretty much more confident with my valuation, and he said, hey, Daniel, not a problem. Just send it, presented me, and I'll send it to the seller. It's also my obligation. Even a lowball offer, they have the obligation to present it. Actually, in one of his calls, months ago, someone said he was so upset that he was going to present a very ridiculous, lowball offer, and like just bordering an insult, right? And and he was asking if that would be, something nice to do or not. And we said, well, it's probably not nice, but he has the obligation. That's when the conversation came up, and we said, hey, it's about what kind of reputation you want to build, right, for yourself and all of that. But it would be nice to hear the response to, or we will be intrigued, but probably would not be a nice answer back, from that. So it's up to you. You want to present it, right? But some good comments came out of that, possibility. I don't really know if actually he did offer that little money for the business or not, but there are always consequences, right, of you doing that. So I believe John's comments are, spot on. Say, hey, I don't want to, just throw a number out there and then you feel insulted. Help me, guide me. I have this experience. I have also my advisors at Acquira, and I feel confident about some of these things, but I still need help. So tell me, and put it on your side of the table. And that's very important during negotiations. Always, for example, let me go back a little bit to negotiating, for example, a service for a company, okay? When you are looking into engaging with a vendor for the provision of a service going forward, you want to always tell them, hey, we agreed to this, you agreed to that, but at the end, we want both of us to be on the same side of the table and look for the betterment of the operation. So if you're going to be providing a service, we're going to be measuring, we're going to be based on those metrics, we're going to be improving, you know, the process and the usefulness of your services. Let's think about these and let's think about that, and let's be, you know, kind of siding on the same team, right? Even though I still pay you, right? And you try to increase the prices and I try to decrease the prices, but in the end, we need to form a team, right? And that is going to happen as well when you acquire the business and then there's a transition, right? And even after the transition, and well, in this case, you said that they probably want to continue working in some capacity. Well, that's another reason why you want to, you know, have this conversation and tell them at the end, we both are going to be on the same side of the table. So let's not, you know, have opposite ends and start arguing about prices and about everything. Because if you don't walk away, you know, completely or walk away with a little bit of pain from this negotiation, but also happy about the negotiation, then in the future, you may want to, you know, not boycott, but take back whatever you gave in or gave up during the negotiation, right? So that's also an important statement. When you negotiate something, if you want all of the points, it was not a good negotiation. If you don't walk away from the table with some pain, it was not a good negotiation. That doesn't mean you lose the negotiation. That means that you gave something, but if you were smart, what you gave was in return for something else you wanted. So you have always these, right? I am very happy with how this discussion is going, and I really appreciate contributions from all of you, Jared and Vipin and John. Anyone else want to add something else, other negotiations you're working on? Don't tell me you have never negotiated anything, because if you have purchased whatever, a vehicle, a service for your home, you have negotiated.
I have a question in regards to when it comes to finding things that you don't like and you knock the price down, how do you determine how much you knocked it down by? Like, so for instance, with that $4 million deal to below 3 million, I assume, you know, there's maybe 4 or 5 things that were issues, not necessarily 10, you know, so
right.
How is that determined?
Right. So for example, one good way to do it is through the investment thesis calculator.
Okay. Calculator. Okay.
And you penalize a multiple right there.
Gotcha. Okay. I haven't gotten that far, so.
Yep. Oh, good. Good.
Yeah, I mean, I think that investment thesis calculator is really good. It does kind of give you that confidence to sort of know why you're valuing something at, you know, at this rate. I think the only thing that I would be interested in finding out more about is, you know, the investment thesis calculator sort of starts off with like biz buy sell and says, okay, find out what the average multiple is for businesses on, you know, in this industry on biz buy sell, and then you kind of get a starting multiple. And I'm just wondering, because like my particular business, there's actually not a lot of them sold on biz buy sell. Is there somewhere else to get information on like multiples and comps that we might have got previously?
Yes, and probably Vipin can give us more details. I have a couple that I can pull from the prospectus I was talking about, but probably.
Okay.
Yeah, it's the usual suspect. So big one that we use is called deal stats, which used to be called price stats. There is some information in BRG, which is called, I think, Business Reference Guide. So they have some what they call high-level multiples. So you don't really get deal-level information, but you get some like rough estimate of what the value could be or should be. There are some other ones like peer comps, PEER, COMP. You have to be careful when you're using any of these databases, as some of them include inventory in the estimates, others don't. Okay. So you have to like read the fine print and make sure that you're not mixing it up. And then, you know, the usual guidance we give to people who are new to this small business M&A is that be cautious of not applying an EBITDA multiple to SDE or revenue. You know, sometimes people apply an SDE multiple to revenue, which is like a easy giveaway that the person doesn't know. So yeah, those are some of the.
I mean, okay, that I'll definitely check those out. Thanks. One of the other problems that I have, just on a side note, with this particular company, is they do have a bunch of ad backs, and they're not too clear on how to even do that themselves. It sounds to me like they just charge a lot of their personal stuff and their business stuff on the same credit card, and it's all mixed up. So that's the next thing, is trying to figure that out, because then I can at least get an SDE to apply the multiple to, and that's the other problem.
Whenever we see ad backs which go beyond the usual suspects of depreciation, amortization, interest, taxes, when it starts getting into personal expenses, that's an area of sort of disagreement. And one way to address that could be that you could put an offer contingent upon bank financing, and a bank might decline that kind of financing or those ad backs. So you won't come across as the bad person. It'll be the bank. So, you know, you could say, well, if the bank accepts it, let me check. And most likely the bank will not.
And that's the challenge. I want the bank to accept it, but you know, I also want to make sure that we work through them and make sure that, you know, we do apply the ad backs that are personal, and what have you. So we'll see where that goes to. Hopefully we can solve that.
Hey, Rick, you know, it may not hurt to reach out to your lender. Right?
I actually have, because I think I brought this up, and I don't remember who it was, but somebody mentioned Diamond Financial to me. So I reached out to them and did speak to them, and you know, looking at other lenders as well. But they said, you know, ad backs are not so much of a problem unless it's out and out fraud. But then I also don't think that they really have a concept of what this particular business is doing, because it sounds like it's not fraud, but they're just charging a lot and of their personal stuff. And so I don't know how they're doing their taxes or anything like that at this point, but we'll see what comes of that.
Here, I believe these are some of those that VP mentioned: value source, market comps, and peer comps.
Peer comps.
Okay. These were used by the business broker that I was working with. Well, those are additional references: value source and peer comps. Right.
Thanks.
This is a very very interesting topic I want to talk about as well. SD and ad backs. And VP, please tell me if you have a different understanding. But SDE is because owners of small businesses, sometimes that's what they do. They put personal expenses through their businesses, right? Which it's a very good way to question and leave out what, you know, VP described. So you could start your valuation without any of those ad backs that are not the regular like taxes or interest, because we are looking at EBITDA as the operating cash flow, right? I have talked a few times about investment cash flow that includes investments or capex as negative and depreciation and amortization as positive parts of that investment cash flow. And that is not taken into consideration for the purposes of valuation. Neither the financing cash flow, which is comprised by the debt and that could be positive or negative if you're repaying the loan or receiving a loan, and the interests, right? And the equity. And it's the same. If you're receiving equity or a business receiving equity, it's positive. Paying dividends, it's negative, right? So EBITDA, which is very, very close if there are no changes in working capital to the operating cash flow, okay? So SDE is a way to tell you, well, EBITDA is low, but all of these other items make it larger. If those are like personal, then from at the beginning, let's leave them out for further discussion and perhaps an increase of the pricing later, right? If they could be really justified during due diligence. Now, something important there, as a matter for discussion, is the salary of the owner. They added in full to get to SDE, but what I would keep as an add back is only the excess from a market salary, because you need someone to work there, the capacity of the owner or general manager or yourself, right? It's a market salary that has to be there in order for you to understand what is EBITDA. So a certain salary has to be there, and only the excess will be the discretionary part. Make sense? So it is better, in my opinion, because some of these multiples we have been talking about are based on EBITDA, not on SDE. So SDE is a way to tell you there are some expenses that are not business expenses. So they are for further discussion, okay?
Okay. Can I just ask a question? So if I'm understanding you correctly, let's say, for instance, I'm just going to pick some rough numbers. Let's say 50,000 is a salary that you would pay somebody to manage that company, but the owner is actually drawing like 100,000 salary. You're saying you would really only add back 50,000 of that salary because you would keep 50,000 as
let's say the market salary was 70, right? So then the real add back to get to SDE is only the excess. It's 30.
Okay, 30. Okay.
Make sense?
Yeah, that makes sense actually. And so then that's actually a good negotiation tip, because you are sort of decreasing the EBITDA, but increasing the SDE.
Right.
By under 30.
But the multiples you would be using for comparison purposes from either those sources we saw, Value Source or Peers Comp or Biz by Sell, are based on EBITDA.
Okay. Sounds good. Thank you.
And definitely operating cash flow is important, but it's harder to is more for people with a lot more experience in finance. The operating cash, all of the cash flows come from the balance sheet. So let me give you an example of operating cash flow. Let's say you have at the beginning of the year or at the end of a given period of let's say 2021, 100,000, right, in receivables, but then you sell 300,000 of revenues, right, and you collect only 280. So your receivables, they turned over, are not the same 100,000, but now they're 120, right? You haven't full collected the 100,000, but you have new 120 because you collected only 180. Okay, so your receivables went up, so that's a negative cash flow. So all of your assets that increase I mean the current assets, like inventories, like receivables, and whatever else you may have there. As they go up, that's a negative cash flow. As they go down, it's a positive cash flow, right? Calculated from the balance sheet, right? Comparing the end of 2022 to 21. So as you can understand, it's a little bit more difficult, you know, for a person without, you know, financial or deep financial knowledge to calculate all of these cash flows. If the balance sheet is simplified, it might be easier. And then the opposite happens on the liability side. If your suppliers or your payables went up, that's a positive cash flow. Make sense? Because you received something, let's say some inventory that you sold, you just wouldn't pay your vendor. So you got the cash flow, right? So think about, and that is, if you read, you know, in Google, or you look at the definition of how to move from EBITDA to your operating cash flow, it's going to tell you, look at your changes in your working capital, right? And your depreciation and amortization, which is not part of the operating cash flow, right? So those three cash flows, I explained it, account for your changes in your cash position in your balance sheet. Hey, anyways, if you guys want to contact, you know, one another, feel free to do so, okay? We can continue this conversation next week if you guys want, or I can, you know, talk about something different. We can bring another. I believe it has been very interesting, and we can do a little bit more of these. I don't think we're done, but more than 1 hour is gone, and some people have dropped for a reason. And I also need to finish some work before the end of the day. So it's better if we finish this conversation now, unless someone else has some last minute comments, and we can continue next week. Would that be okay?
Good. Sounds good. Thank you, everybody, for all your support.
Okay. I really enjoyed the conversation today. Thank you, guys.
Thank you. You too.
Bye-bye.